And you've got stock index futures indicated for a huge rally on Wall Street. This tentative ceasefire is something, it really is the first good news in 6 weeks.
Good day, good people. Good day indeed. President Donald J. Trump has us in the middle of a 2-week ceasefire. This is great news. This has brought oil prices down a little bit, and the markets have responded positively as they have rallied a little bit on both Monday and Tuesday. This is great news because most people are experiencing about $4 per gallon across the nation for gas right now, and that's getting a lot of attention. But it's not the full economic picture. Not even close, because while everybody's watching gas prices, two other signals are flashing at the same time. And they matter just as much, if not more. Now, in this video, I'm going to highlight how the stock market had 5 weeks of straight losses, and while mortgage rates have jumped a full percentage point since the conflict began. Oh, snap. And while those two signals tell you something deeper about where the economy might be headed. And here's the part that most people are missing. Gas prices are what you feel first, but the markets and mortgage rates, that's what hit you next.
Big decline in oil prices, 13, 14, 15%, the biggest move of the war so far. And you've got stock index futures indicated for a huge rally on Wall Street. This tentative ceasefire is something, it really is the first good news in 6 weeks for investors who've been grappling with worries about an oil shock that could hurt the American economy. In fact, you've got gas prices up again. Oh, snap. Overnight here, now $4.16 for a gallon of regular. You can see how much that has climbed. Experts are telling us if this ceasefire holds and if you get tankers moving through the Strait of Hormuz, in a matter of weeks, perhaps you could have some relief.
Let's start with the stock market. 5 straight weeks of losses. That's not just noise, that's a signal. Markets don't move like that without a reason. And what they're reacting to is uncertainty around conflict escalation, energy prices, global stability, and future growth. And then when investors don't know what's coming next, they pull back. And when they pull back long enough, that starts to affect confidence across the entire economy.
What is the single biggest factor driving this ongoing dip? And do you think that things are actually going to get worse before they get better?
Yeah, it is the uncertainty over Iran. And the thinking among investors is that what started off as a short-term geopolitical flare-up might turn into something more longer-term that could really impact the U.S. economy. And for that reason, we've seen a pretty nasty month of trading on Wall Street. If you take a look at the major indexes, they're down all over 7% over the last month. If you zoom out from their all-time highs on both the NASDAQ as well as the Dow, we're now down 10% from those highs. That's what they call a market correction in the parlance of Wall Street.
Now let's layer in the second signal, mortgage rates. Since the conflict has began, mortgage rates moved over a full percentage point. A full percentage point, that's a big move. And it doesn't just affect home buyers. It affects affordability, refinancing, construction, and overall housing demand. We've already talked about how housing costs have been elevated due to aggressive ICE activity, which was highlighted by Republican lawmakers in Texas. Now, if you're going to add higher borrowing costs on top of that, that's going to mean fewer people can afford to buy, and those that can, they're going to pay significantly more over time. Well, that really sounds good.
So let's talk about the impact on mortgage rates. What have we seen with regard to that so far since the war started?
Yeah, mortgage rates jumped above 6.6% just on Friday. Oh, snap. By the way, I should point out, before this war, mortgage rates were at 5.59%. So that is a big jump in a pretty short period of time. I think a lot of people are asking the question, why would a war half a world away impact the rate that I pay to try to buy a home? And the answer is really the Federal Reserve. The expectation is that the Federal Reserve might now have to start thinking about an interest rate hike later on this year. That has an impact of obviously nudging up mortgage rates as well.
You didn't see that coming.
We'll have to see what markets do today. But again, this is something that people were not talking about prior to this war, whether or not there would be a Federal Reserve rate.
So step back and connect the dots. Gas prices rising, markets pulling back, mortgage rates climbing. These things aren't isolated events. They're connected. They all point to the same underlying issue, uncertainty. And uncertainty has a cost. It slows investment, it raises borrowing costs, and it puts pressure on everyday budgets. This is why only focusing on gas prices is misleading. Gas is the headline, but these other two indicators, they tell you where things might be going. Because if markets stay weak and borrowing costs stay high, the impact doesn't stay contained. It spreads into housing, into jobs, into long-term growth. So the real question isn't, are gas prices going up or down? We can go to the pump and see that. The real question is, are we watching the early stages of a broader economic shift? Or if this is just a temporary reaction? Because if it's the former, then what we're seeing right now is just the beginning. Yo, if you want more breakdowns like this, where we look past the obvious headline and we focus on the signals that are underneath, then stick with me here at the Independent Mail. Because the numbers you see first are very rarely the most important ones. Until next time, you guys, peace and stay informed.